So I did a quick short video a little bit ago, like literally an hour ago, tried to give you guys an update when you're coming right off this candle right here, just because I was seeing a floor temporarily created in the S&P 500 NASDAQ and figured that we'd at least get a temporary little bit of a relief rally, even if it was just for the next couple hours or going into the end of the day and closing. So for anybody trying to day trade this or trying to watch these ranges, I laid out that I thought we'd come literally right off of this candle up into this zone. I said in the video we'd probably get some wicks up into here, but not to get too carried away on the green candles and start FOMOing in because there's still extreme resistance at these red lines previously marked here. You got one at 19.3 and then 19.375, which was a nice support going through the weekend. I said most likely you'd get rejections there, come back down into these areas and start ranging. And for the most part, it's happening exactly as I stated. The problem is the video didn't upload. You can hopefully see from the way these lines look and the way things are drawn out that they're behind there. I mean, I guess there's apps where you can move them to the actually, I guess it does it in this. You can move it to the front or the back. So I guess technically you could be lying about this, but yeah. So, anyways, this was laid out about an hour ago. Tried to give everybody a little bit of a warning when they started seeing those crazy green candles. That would be a reaction to a temporary bounce in the S&P, and it didn't mean that the floor was in or anything else. Just markets don't only go one way, and you get too exhausted on the selling from the bears. The bulls have to step in at some point, and things go back up the other way. That's not to say that as of today, that is or is not the actual temporary bottom down there in the 359 or 35.75, 35.90 ranges on the SPY ETF or the S&P 500. But what it does mean is until further updates and further notice, the way things are looking right now, we're going to range in this range until we get more information. And I would look for probably tomorrow's opening to be the next big thing, unless there's some sort of news that's going to come out in the next hour or two to move markets before closing. But I think they've done and accomplished what they needed today for the opening of Monday after coming out of a tough weekend and after coming out of prior a tough week of a lot of sell pressure as well. The week was already a lot of selling, and then I thought that coming into this week we'd get one of two things: either possibly some relief Monday, Tuesday, and then Wednesday, Thursday, Friday could get worse with meetings, or there was a possibility, I said, maybe sell off in the morning because we're coming off of the doom and gloom from the prior week and whatever goes on over the weekend. And then by the second half of the day, rally. However, I quit pushing that second half of the day rally idea once we started the beginning of this week with increased issues with the war in Ukraine. And it just seemed that all of a sudden the narrative was ramping up to push things down. So not only did I expect a sell off, but I then kind of gave up on the second half of the day rally. But once again, markets don't only go one day. So, you're getting a little bit of a relief here. However, I wouldn't expect too much from it. And I wouldn't expect too much from, Bitcoin separate from what the markets are doing. The Bitcoin is following the markets. The crypto is following the broader stock markets as well. So what you're getting here, including these big green candles, was, just complete reaction to what the stock market's doing. As the stock market closes, I would think that you'll relieve some of the sell pressure from the stock market, and then you might start seeing some more wicks up into these areas, possibly even this 375. But keep in mind, these are now resistance, and this 375, 19.4, 19.375 range, these on Bitcoin were support all through the weekend and after the sell side pressure of last week. So the fact that they were once decent support, they will now make decent resistance, in my personal opinion. So watch for these candles and these wicks to get rejections in these red areas. And if you're looking to short, these would be golden buy zones until invalidated, and you could, short them down. If you don't like playing markets both ways, you're still looking to scalp and trade daily, you'd be buying down in these low levels, selling up in these high levels, and possibly even in just this even tighter range. You're literally trying to buy somewhere as close to 19,150 as you can get, and you're starting to look to sell anywhere up around 19,296. I mean, you're literally within like $100 to $200 price range. I mean, I guess it's better than a lot of what we were seeing when we were being walked down 100 at a time by the bears coming into this. So there's increased volatility a bit from the sell off with the markets, and then also the brief pump we just had with the markets. So play it accordingly, and be safe. And remember, capital preservation. We've got crazy news coming out this week. We've got much more to come Wednesday, Thursday, Friday from the Fed, and who knows what else is going to go on the world stage.